Hello. Welcome to another episode of Friday Drinks. We are still at the Nicoz Diamond Auditorium. And once again, special thanks to Nicoz Diamond for accommodating us. You've got the usual mugs here who don't know what they're talking about. Don't take them too seriously. But we've got... can we still call you a guest, Musoni?
I don't know, but I do know what I'm talking about compared to your regulars.
Well,
it's always a pleasure having you.
Yeah, it's always good to have Musoni.
Yeah.
Musoni, I see you brought your own.
Mm-hmm.
What is it that you are drinking?
Well, I'm celebrating to being a father, firstly. And secondly, there's nothing as good as a tried and trusted franchise like yourselves, but also like Glenfiddich. And I know they're not paying for the publicity, but they do a fairly good job. I'm having a 12, not their very best, but certainly the start of good things. Single malt, and mostly to celebrate the work you're doing with the guys, but also to celebrate that you're all great dads.
Oh, cheers to that, my guy.
I'm not sure all of us are happy being announced as guys, but Mkanya,
are you persisting with your tea?
What shrubs are you heating up?
Yeah, I'm persisting with my English fine tea, the afternoon tea. It's a great afternoon, like I said before, and yeah, thoroughly enjoying it.
Each to his own. I'm continuing with the 16 Men of Tame, and as I've said before on the show, this is a favorite of my father-in-law and I. So cheers, Shumba.
Yeah, I'm carrying on with this fantastic South African brandy. It great value for money. It will rival any of the best cognacs from France. So, cheers.
Cheers.
Cheers to that.
So this week, I thought it would be good for us to dwell a little bit on the basics of economics. I think sometimes we throw around terms, we assume people understand how things come together and why certain things are important. So maybe we'll start with Musoni. We've got another economist here today. Are you still one?
Well, I don't know anymore, but when I'm asked what I am, I tend to default to I'm an entrepreneur. But I'm not
Sorry, carry on.
That is rather unkind, sir.
No, look, I can take that. I think one of the obligations of leadership is to be able to absorb alternative thinking. So well done, George, for demonstrating alternative thinking.
Anyway, so there's things we throw around, and we always talk about the currency.
Yeah.
On the show, and once in a while we step back and we try to explain that it's about the monetary aspect of the economy. But I think we tend to leave people behind. Could you help us frame the big moving parts in the economy? The fiscal aspects, the monetary aspects, the current account, the capital account, and all these big terms and how they come together, and why it is that on this show we're so worried about the monetary aspects.
Yeah, thanks, George. I think for all of us here, we should worry about the monetary aspects, principally because I believe we're mostly banked in Zimbabwe and not elsewhere. But we need to start asking ourselves what the problem is with the world as well, because...
Is he making up his own question?
No.
I'll come back to your question, because your question has a sub-context which is critical. Our country is a very small...
Letting the two of them
sit on the same side.
They were in the same classes doing economics.
Yes.
And their thinking is equally...
But you will understand that I did most of the interpretation for him, because... I'd like him to deny that.
He had no idea what was going on.
Yeah, especially when the teachers would switch between Shona and English and so on, because he was specifically able to learn in the one language. But I actually think that the real story for Zimbabwe now is now a lot less about our monetary supply, our current account, our M3 growth, etc. The question is, are our businesses, our political leaders starting to think where we are in the full picture? Right now, we've got a war that seems to be escalating. I understand that if Joe Biden is in China for the next week, he's interested in talking to the Chinese about Taiwan. But the reason he wants to talk about Taiwan is because he really wants to talk about Ukraine. Now, if that will escalate, we need to expect an escalation in inflation, certainly for us in Zimbabwe. We need to start asking ourselves what will happen to the stability of the food component of our CPI. And then we need to start asking ourselves, what will the world look like if Russia wins or if the Western powers win? Because that is an entirely new world that will arise from that. And unfortunately, the impact that these developments will have on our country is vastly more profound than whether or not we've condoned another 6 billion. That will be immaterial. What will be material will be what happens between the big players, the ones that we rely on. That's my view.
No, obviously,
we've
it's
got
something to get off his chest. So
Clearly, I was just wondering where this is going. Okay, anyway.
So we've got a huge exogenous pressure on our economy, which for a while we haven't been thinking about. We've only been thinking about the political dimension. We accepting guests from Russia and guests from all these countries, but the truth is, have we started thinking about how we could position our country for growth? I'm not hearing that. Maybe we could become the supplier of choice of copper or bronze or brass to the world for the microchips. I don't know. But these are things that I think we need to start thinking about, because as the world changes, so should we.
Okay. Now can you get back to the question?
Does he remember the question? But look, I think he makes an interesting point, and
are we not going down a rabbit hole?
Yeah, we're segueing. We're not. You're not a tyrant. The conversation will go.
I think it will come back to the original question. But
yeah.
Please go ahead.
I mean, Tinashe's made this point in a previous episode about us as Zimbabweans being inward looking. We're a small, poor country. On a good day, our GDP is 18 billion. And, but we live in a world where just in SADC alone, if it's orders of magnitude, economically, in terms of GDP and in terms of population, the size of Zimbabwe. And we could transform our fortunes if we were more outward looking and thinking about how we can export more and do more trade with just our neighbors here in SADC. But we tend to be very inward-looking and focus on the things that are tormenting us here. And this is a point Tinashe made in a previous show. And I think it's relevant that what's happening in Europe with Ukraine, that's going to affect us whether we like it or not in terms of our import bill. It should actually get us to rethink our, the way we do business and our vision for our country over the next 5, 10, 15, 20 years, where, is our greatest potential economically, apart from just solving these problems we have today of high inflation and currency issues and that sort of thing, which, by the way, if we had an economy that was thriving, that was growing double-digit, we wouldn't have, right? And we've got conceivably almost every mineral under the sun, diamonds, lithium. We've got a company prospecting for oil in the Zambezi. We've got coal in Wange and Sengwa. We've got natural gas apparently as well in the low veld. We have iron. It's hard to imagine of an important global natural resource that we don't have.
Platinum.
So we shouldn't, so we're actually poor in spite of our wealth, which is actually ironic and sad. So I think you raise a valid point in terms of we really need to be thinking about the world differently. Our mindset as we approach economics should change.
George, just for your
would
question.
you also like to just throw out some random thoughts? It looks like this is what
Okay,
we're doing.
I'll tie it around. Unfortunately, it's a more a Keynesian framework, but
It wouldn't be
tie in-
international without big words.
Yeah.
But it will tie in. No, I'm trying to tie in what
I'll
they say,
interpret it
which
for
is an ISLM. Because you started with the big words, eh? Because we need to contextualize it. In ISLM diagrams, and what they're saying is the international supply and demand. So our international supply and demand, our interaction with the world is going to have a greater impact. So that interaction, we are now looking at our current account and our capital account. That's how we interact with the rest of the world. And how does that then affect the supply and demand of goods in our local market? And how does that supply and demand of goods in our local market then affect the supply and goods of money? Supply and demand of money in our economy. So that's how we tie in. And they're saying that actually at this particular juncture in the world, the monetary is less of an impact and the fiscal is less of an impact than what's actually happening in the international market. And the international market, where I tend to agree with them, is if you look, we just had a currency indaba, because everything is interacting with the currency.
A what?
A currency indaba.
What is it?
This is our political actors, Pollard, gathered to discuss the currency crisis in Zimbabwe.
So people
The
that,
crisis
so
that is
people
not a
that,
crisis.
So people that don't print money gathered to discuss.
Why we're printing money.
Oh, okay. Sorry.
But that's how it interacts. I tend to
That's what we
disagree.
do week in, week out, by the way.
But I tend to disagree with the gentleman. I think that because we are a small country, we need to focus on the things that we have greater say in, rather than the international market. I think to us, we are a price taker. So it doesn't matter what we do. We're just going to be a price taker on the international market. What I mean is the exchange rate for us, it's an impact of our interaction between our goods market and our money market. And then whatever we're doing with our goods and money market just translates to a particular exchange rate. We don't determine the international exchange rate. So to think that we can have, or that the war in Ukraine can affect us, or we have any effect on that, I don't think so. So what we need to work on is the goods market. And unfortunately, the goods market, the country is contracting.
So when you say the goods market, you mean the stuff we make. We need to make more
Output.
stuff.
We just need to make more stuff. We need to make more stuff. Unfortunately, we haven't been making more stuff.
For who are we making more stuff?
It actually doesn't matter.
Okay.
It doesn't matter whether you're making stuff for ourselves or for the international market.
That's a good point.
Yeah, it doesn't matter.
Okay.
But we're just not making enough. And we're not making enough in a growing economy. I mean, the census will be done, right? And when you look at the census, it was done. The results, I was actually away, but the results will come.
So you weren't counted?
I think that's
I was
appropriate.
I was counted. But when the results come out in the census, it will show that the Zimbabwean populace is now closer to 17, 18 billion. Million. And if the economy is
17, 18
is
billion.
he the only one here who's
15.
not drinking?
15 billion, it means that we per capita is now less than 1,000.
We're not
That
a
is
poor country.
worrying.
We're a low-income country.
Okay, I'm
Low-income
going to push
country.
back a little bit and say that it matters who we manufacture for. So one of the things that I find quite interesting is if you look at a country like Saudi Arabia, and if you were to look at the way they run their economy, like the detail, do you think that these guys that they're brilliant, or they make so much money pumping oil and selling it to the world that they can afford to actually have a mediocre government policy. But because they're making so much money, it doesn't matter what you actually do.
I think that's the secondary question.
Isn't that contradictory with what you're saying? So you're saying it matters who you manufacture for, but you're actually saying it doesn't.
No. So because obviously
that's the secondary question. That's a strategy
because
question.
when you're manufacturing for Zimbabweans, right? And if you look at it from a per capita perspective in terms of income, right? We're poor, right? So there's a limit to how much you can sell to Zimbabweans.
Chinese, so Indian.
But if you're selling to global markets, right? So you can sell every ounce of gold you produce. So if we increase gold production by 100 times, we would sell every ounce of the incremental production. Yeah, but if Delta increased production 100 times, they're not going to sell 100 times more Bollingers or Zambias, I can assure you. Because Zimbabweans have no capacity.
I will try to help.
They've got capacity to
to
drink it, but not pay for
Okay,
it.
No, that's where
that one.
Musoni's analysis comes in, because we're saying it actually doesn't matter. If the economy was right, and Delta, this is where the money market comes in. If they could get enough capital to expand their capacity and export Bollingers or whatever it is, they would.
Are you guys getting paid for this? Ranga, are you watching this?
No, but look,
they would. So
bears mostly watch. Let me just give you some basics.
Well, we have to go for a break.
And we will never be a massive exporter of beer to, say, Egypt or Australia.
Oh, no, we can.
No.
And that's where.
Okay, you guys are going down a rabbit hole. We're going to go for a break now.
Thank you, George.
And no more. Both of you, no more. There's only two people left allowed to drink, me and Musoni. We'll be right back. Welcome back, and I am not going to allow these boneheads to go further down this rabbit hole. Fortunately, we have some level-minded people in the audience today, and maybe we'll take questions and comments from them, because you've clearly had too much of that South African brandy. And I won't call it English tea, because it's not a single tea bush in the United Kingdom. Whatever you're drinking. Anyway, have we got questions in the audience?
Following the conversation, it seems there is so much to do with the conflict in Eastern Europe. So maybe my question would be, in your views, the scale to this economy, what is the potential effect of this, let's say in 3 months' time, the conflict is still there. These are two countries, and the whole world is being affected. It probably means they are a bit significant. How is the world of 7.7 billion people being affected by a military operation in two countries? How do we prepare our businesses that in 3 months, in 6 months' time, the same happens? What do we do? Where are we going? Two, in 2009, when we had the inclusive government, a civil servant was getting $100. It was enough. Give a person $100 now, it's nothing. Is it about our economics? Is it about how we price our goods? If a $100 bill could pay your rent, take your kids to school, buy groceries for the whole family, why can it not do it now? So we may talk of, because when we compare ourselves with Zambia and Malawi, we are talking of a population with more, maybe 4 million more people than we have. How do they consume less than us? Is it the volume? Is it the dollar value? If it's the dollar value, then you have a problem. how we price their goods.
Thank you. So I take two questions from that. One is on the impact of the war in Ukraine on us, and maybe Titch, you can prepare an answer for that.
Mm-hmm.
And then Tinashe, because you're the one who threw out the statistics about Zambia and Malawi, you can prepare an answer for that. Please keep it brief, gents. I've got one comment. When there are tanks and planes bombing and people shooting at each other, we call it a war. Titch, would you like to go?
Yeah, thank you so much, Daniel. I think that's a good question. And for me, it tells me that there are people who are starting to see that we need to understand this war, because that has a much larger long-term effect on our country than a condoning 6 billion expenditure. I think the first thing...
I'm starting to get a sense that you're okay with this condonation bill. But anyway, carry on.
In my view, it's immaterial. Because
Go ahead, girl.
if Biden leaves China tomorrow with the support of the Chinese to do whatever he feels like, then there will be problems. The first thing is the price of oil will definitely go up. You will follow that Italy was given half the supply they need last week, and going forward they're going to get less. And one may say, so what, it's Italy, it's so far away, but actually that is going to have a very serious effect, because Italy is not one of the major consumers in the world, but it is definitely in that basket of large economies. So if you follow what the commodity exchanges are saying, they're expecting that within the course of the next 6 weeks, the price of fuel at the trading level is going to some odd 150, 160 a barrel. Now at 160,
Compared to how much now?
123. And now what it means is that our fuel, you know, I have a diesel car. I'm paying $1.68 a liter. I should get ready to pay $2.10, $2.15 a liter within the next 10 months. So
Would we pay 85 cents? Like,
but this is people watching the news and saying, that's Donbass, that's Mariupol, so what? And then they don't understand that
Back at the ranch,
but they're missing that the reason why someone as senior as Biden has now gone to China for a full week is to try and understand if they will condone them going in to extract whatever they consider to be the problem. Now, if this was one of the other countries they've been to before, Syria, Iraq, Libya, I'd say fine. But I think we're all aware that Russia is a very serious military force. And a lot of people who have been watching, like generals and colonels, American and so on, they know that it is true. By Russian standards, this is a special operation. If you study what they did in Aleppo, in 3 days, they razed Aleppo to the ground. And even the Allies said, look, Russia, you know, we just wanted a bit of help getting rid of them. Now there's nothing left. So even though the Ukrainians may say that it's war, and you might say it's war, if the Russians really tell you that it's war, don't expect any termites to survive. Don't expect nothing. They've not targeted any power stations. They've not targeted anything at this point, because the Russians are a very serious military force. And you've heard about those hypersonic bombs which they haven't even used. And these are bombs which are now able to travel at 30 times the speed of sound.
okay, can we come back to the...
Back to your question.
Thank you.
I think you've been watching too much Russian TV.
No, I don't watch Russian TV.
I'll pay for your Netflix.
With the early, with the early stages. We are at the early stages of this thing. And this thing can have us paying $5 a liter for petrol if we're not careful. It could have all of us being conscripted if we're not careful. And here we are wondering if we should condone or not $6 billion?
It's been condoned, but okay. I chime in. I have a different perspective. I think so.
Conscription in Zim.
You know that we were part of the World War II effort.
Yes.
That's ancient history.
And here's history repeating itself.
They didn't have ICBMs and all these big weapons there. They needed people. Anyway, okay, that's your opinion. It's like a nose. You're entitled to it.
So, Daniel went back to 2014, and I think, for the most part, the West yawned. They said, look, we don't like that you've annexed Crimea. In 2016, when there was this resistance movement in the Donbass region, the West again yawned and said, this is not really a big deal.
Is this becoming a political show?
No, it's not. I'm just giving his important historical context. So
please don't butt in. He was making a very good point. Let's hear
because you like his point.
No.
Carry on.
Yeah. And life went on. Like, the oil markets were trading as normal. Business in the world was normal, right? So where things changed on 20 February this year is that
24.
Sorry, 24. Yeah. 24 February. Sorry, 24 February this year is that the West actually said, no, this is a problem. And whether you think that's right or wrong is immaterial in my view. What matters is that it's having an impact on global commodities. And from a Zimbabwean perspective, every liter of diesel and petrol that's consumed in our country is imported. We import a lot of things whose prices have been...
CZI reckons we only add about 7% value.
So
the final dollar, only 7 cents is what we've added. The other 93 cents we imported.
So as those commodity prices go to record levels, as shortages emerge in some of these commodities, we are going to be affected in the most unpleasant way in terms of disproportionately higher prices and even shortages. Our capacity to import some of these things is going to be affected.
So you agree with Pitch?
So
it's going to be bad.
On the import side, it's going to be very bad. But and I think this is the point that Titch is trying to make, and I've made this point before, that as a country, we also export a whole bunch of stuff.
Yes.
And the things we export are also benefiting from the sky-high commodity boom, right? And what's unknown in the next 6, 18, 24 months is whether we respond to the crisis in Europe and take action to dramatically increase the production of these things. So that on a net basis, yes, we're going to suffer. It's a given. That's baked in already. We're going to suffer on the import side. The question is, how much are we going to benefit on the export side? Are we just going to keep production at this level and just benefit from the higher prices? Or we're going to take aggressive action, double production, triple it, quadruple it, and then enjoy not just a price increase, but much higher revenues. So that on a net basis, as a country, we're actually better off. So I think that's the question, and that's the conversation that I don't hear happening.
That's the conversation that actually George was hinting on when he was talking about the current account and the capital account. Now, the problem that has happened is over the last 5 years, we have been a net exporter of capital. We haven't received capital in, which would have increased our capacity to then export more. So I actually go with your former argument, which is actually, it's going to hit us really, it's going to harm us quite a bit, because we've had the auction and we've had all these things in our local economy that actually limited the amount of exports that we did, and that limited our capacity to export more.
Thank you, Tinashe. And going further, the point I was hoping that you gentlemen would bring out is that in a small, resource-rich economy like ours, a current account deficit is a good thing.
Yeah.
Because it means, when you've got a current account deficit, it means you've imported more than you exported.
But
Okay, that seems like a problem, right? But the
No.
question, can I explain why? The question you must ask is, who paid for the difference?
Yeah.
It means there's people out there that have a lot of confidence in your country, that have given you money, that have given you credit. It actually means there is a credit
George.
on your capital account, whether you can see it or not. There's somebody who is invested in you. So, and I wanted this issue discussed because it's been a lot in the news lately, the current account deficit. And I think it's not a terrible thing.
well, I have to stop you there. Our current account deficit,
This is why you're wearing socks.
yes, because
All this winter, it's wise to wear socks. I hope you're wearing socks as well.
No, Tinashe tells us you can wear socks or not, depending on how you feel.
well, since Tinashe is the authority on fashion, please tell them that I'm dressed appropriately. I'll say
Just
that
make
for
your
another-
point.
Your current account deficit can only be a good thing when it is contained of capital goods, equipment, technology. But our capital account deficit is toothpicks,
I don't think it matters.
it's water.
I don't think
it
it matters.
It does.
I don't think it matters because somebody's
we're
giving
frittering away capital.
somebody's giving us free water, and they're saying, "Pay me later."
No, that's not actually what's happening. So
You're
so,
saying
okay,
you're saying your CFO is coming to you with a requisition for water and toothpicks.
I think you're
and
not
no
getting
new
you're
equipment.
not getting George's argument. We don't determine. So the current and the capital account. Let's be very clear. We don't determine what's actually happening there,
So
right?
So we shouldn't talk about it.
All we can do is to read. So it's like our balance sheet. Right?
It is our balance sheet.
It is our balance sheet. We don't determine. We actually say what we have in the goods account. That's where we determine what we're doing, what the economic players are doing. And then at the end of the year, we sort of say, okay, whatever they were doing, let's look at our balance sheet and let's see what it's telling us. And right now, what it's telling us is that we are actually exporting capital and we're importing toothpicks.
wow,
Right? That's actually a problem.
that
Right?
cannot be
So
appropriate.
you want the reverse to happen,
Yes.
where you have a current account deficit
And a capital account.
and a capital account surplus. Because what it means is during these periods, and that's the point that George is making, that during these periods, because if you have a capital account surplus, it means that you're actually expanding your capacity.
Well, what you're saying is we have an overdraft from a lot of people.
Yes.
Yes.
Now,
But-
I know
but
what
Titch,
overdrafts
but-
come with on the supply side.
Yes, no, I understand, and they're not cheap, right? And it becomes your problem to structure. But Titch, you, wherever you live, you have a neighbor who, if their house was on fire and they came to borrow a hosepipe, you wouldn't give it to them. Because
Really?
Because that guy is never bringing back my hosepipe.
Come on, George.
and then you have a neighbor who walks along on some random sunny day and asks to borrow a petal of one of your flowers,
No,
and you give it to him because
I'll tell you what.
he's
I was
good
going to
for
bring it back.
He's
I was
good
asked
for
for
it.
a corkscrew. I've been asked for a
You
corkscrew.
know, we're going down a rabbit hole. I think Daniel had another question.
We're gonna get there.
We all made an answer. But the point is, on your current account and your capital account. So when people are lending you money, it's a sign of confidence.
It could also be a sign of excess capacity on that side, because we've gone through
that's why you're a developing country.
we've gone
Remember-
through two pandemics. We've gone through the
No,
COVID
but I
pandemic,
need to correct.
and now we're in the war
I think
pandemic.
George is lost on this. So let me just set the record straight
Please
here.
assist.
Right. So on our current account deficit, right? What's happening is it's not that someone has faith and confidence in us.
No,
and is giving-
capital
No.
surplus. Capital account
I'm talking about the current account deficit, right? For consumables like toothpicks and water, like you've used, right?
It doesn't matter.
Yeah.
what it
So
is.
what I'm saying is, it's not your reading of it as faith and confidence in the counterparty here is actually false. That's not what's actually happening in the Zimbabwean context. What's happening is that you have a cousin.
No, we have a current account
Can I
surplus.
finish? Can I finish? You have a cousin in Australia who you have a conversation with about buying inventory for your business, right? And they fund it offshore. So the import comes through, and in our national accounts,
I think you missed a very important point that Tinashe was making.
Yeah, no, I
We
think
have
you guys are not.
a current account surplus,
Surplus.
which means on the current account, those people won't give us credit. They are saying, if you want to borrow my hosepipe to put out your fire, pay a deposit.
And that's why money is our capital account.
So money is going
moving out.
Mhm.
And I'll actually be more cynical.
is our capital account moving out of our current account? Let's be clear.
No, so you must understand, and
It's
this
a balance.
is the discussion that I wanted us to have. The two items are in seesaw.
Yeah,
When your current account is in
it
surplus,
must balance. It's a balance sheet.
It by definition means if your current account is in surplus, by definition it means your capital account is in deficit. So if we are managing a current account surplus, it means
It's our capital account.
other people are not giving us credit. We have to give them credit. So if we want to import whiskey, they say,
Which is very important.
you know what, pay me upfront for the whiskey. Then I will make it, then I will pack it, and you will get it in 3 months.
It's actually worse. No, that would not affect our capital account. It's actually saying we must pay them a year in advance. For it to affect our capital account, it's a year in advance. But I would actually be more cynical. When you see a capital account deficit, like we're seeing, it means capital is moving out. What it actually means is that is how people are taking money out of Zimbabwe offshore, right? They're just using goods as a means in which they can I don't like using the word externalizing because
but
that's not.
they're
but it
selling
means
shares,
that
they're selling houses,
whatever they're
they're
doing
selling trucks
to move
and the
money
is
out.
going out.
That's why it's a problem for a developing country, and that's why he started with you're a small developing country. You should be attracting capital, not exporting capital.
So go back to your example of my cousin in Australia, right? If my cousin in Australia or whoever in Australia has confidence in the country, they're sending money here. Okay, there's some mathematics where they say, I'm not going to send it via the bank, but I'll send you a car. But it'll show up on the current account that we imported a car, but there was no money that came out.
To pay for it.
So we've got a current account deficit,
Yeah.
but we've got a capital account surplus because a car came in, which is a capital good.
Yeah, it's a capital good.
That's not
the
what's
point.
happening.
Yeah. So the next question that was asked about food,
Yes, Zambia.
Zambia, Malawi, it's down to actual consumption. So if we look at consumption of food, let's use maize as a good proxy, is we consume about 2.5 million metric tons a year. That's exactly what Zambia and Malawi with a bigger population actually consumes. So that's where it's actually coming from. That when you just look at the actual per capita, we are actually consuming a whole lot more because that population is actually a lot more. And part of the reason is because although they are subsidized, our subsidies here are higher. So the price that you're paying for maize meal, for example, it's actually much higher in Malawi and Zambia than it is here. I think Zimbabwe is like the cheapest. So naturally, if the price is lower, it means we consume more of the good.
What Tinashe is saying is because of the price of maize in Zim, we feed our dogs imported mealie meal.
No. That you, George. But I'd
No,
like
but I actually don't think that's the case.
No, okay. Anecdotally, it is.
George
Anecdotally,
is
it is.
on the money.
I have a bunch of dogs. They eat imported mealie meal. But if
You're exceptional. Look, so what is actually happening? I suspect. So I'm differing with George. So, and I'll use fuel as an analogy, right?
No, we're talking about food.
Yeah, we're talking about food, but I want to.
We're talking about maize consumption
but I wanna,
between Zimbabwe
it's an
and Zambia
analogy,
and
Tinashe.
Uh-huh.
Yeah. So we had fuel shortages when we were selling fuel in Zim dollars at a discount to the region, right?
that's supposed to argument.
And it's not that Zimbabweans consumed more fuel, right? What I think happened in that era is that there was a perverse and very strong incentive for bad actors to buy fuel in Zimbabwe and export it to Malawi, Zambia, and Mozambique.
No, Rufaro, I think
That's
It's
why
not that
a bad
people actually.
analogy.
No,
That's
no,
actually
Rufaro,
a bad
I think
analogy.
with respect,
You think we actually
you've
consume more?
got your head in the clouds. The issue is when fuel is cheap, and you've got a choice between sending your gardener to walk down to the shops and buy a loaf of bread, and getting in your car and driving to the shops to buy a loaf of bread. When fuel is cheap, you're gonna drive. When fuel is expensive, you're gonna be like, "Mkoma," and I'm gonna chingo. And that's when you then
This
extend
is that as well.
when you
But
extend that to the
He's
economy.
actually confirming your argument for you. He's confirming
I
that
actually-
the distortions are the problem.
Yes, the distortions are the problem. But at the end of the day, when we look at the macros, we're consuming more than Zambia and Malawi. That's all we're saying,
yeah, I agree.
right?
No, but
We're consuming more. And it is unsustainable. That's all we're saying. Is that actually when you're now importing, and that's why you were saying, we're importing to feed my dog. Because it's unsustainable, and now we're importing.
I'd like to comment on Zambia.
Okay, James,
price is
more.
wrong.
James, this is supposed to be a Q&A show, and we're now making it.
I'd like to
not a
add
Q&A
something
show.
on the Zambia thing.
No, we are. You're not going to add something.
It's called diaspora.
You're not going to add something on the Zambia show. We are going to take another question. Daniel, I can see your hand, but we're going to let other people ask. Sorry, please hold on. Rufaro, please note all these moments for editing. Or else we're going
I
to end
just
up with a
wanted to
3-hour
ask
show.
because you did mention that actually majority of the maize goes to human consumption, and the point he was making about agriculture and whatnot. And I was wondering, Malawi does consume a lot of rice, I think, as well. Is that maybe possibly because our primary form of starch actually is maize, sadza? We don't really have a lot of varieties for majority of the population, whereas in other countries they actually have a diverse range of starches. Has anyone looked into those numbers?
Yeah. So that's getting into the micros, which I think we can look at. But just broadly, you have our big problem is we're producing less of it. We're not competitive at producing it compared to Zambia and Malawi. And then our price mechanism is not adjusting for those distortions already, the GMB distortions. So it ends up being a cost to the nation.
I'll help Tinashe there. So you can step back. I understand where your question is coming from. If you step back and you look at the total grain consumption figures, so whether it's maize, wheat, rice, and other grains, the pattern still holds. The pattern is the same.
Okay.
We use maize because it's just more relevant.
It's cheaper.
And it's something that we all understand. The pattern still holds. We are not efficient. We consume a lot more because of our pricing mechanism, we're wasteful.
Okay.
And our wastefulness applies similarly to rice because you import rice using the auction, and you can sell it basically at half price. You import cooking oil
At auction.
and you can sell it basically at half price. So people are going to be more wasteful, they're going to be more consumptive than if they were paying full value for it. And there's a perpetual discussion around the estimation of our GDP figure, particularly against Zambia, because if you look at consumption of things that are very measurable publicly, like beer, like milk, like sugar, like grain, against Zambia, our listed companies, so this is things that we don't need the government to help us estimate. We look at the Zambian I don't want to say Zambian breweries because it's a company, but the breweries generically in Zambia versus the breweries generically in Zimbabwe. You look at the fizzy drink manufacturers in Zimbabwe versus the fizzy drink manufacturers in Zambia. The ones in Zimbabwe produce more. The milk producers in Zim produce more than the ones in Zambia. And yet our population is lower, and yet their GDP is higher. It then makes you ask a lot of questions about, does that mean our GDP figure is wrong, or does that mean we are wasteful?
We're wasteful, and how we know we're wasteful?
Or both?
No, we're getting currency at auction at half the price.
There's a question over here. Yeah. Oh, sorry. Are you trying to ask a question? No.
This is a question I want to.
Yes, please go ahead.
Okay. But I've got two questions. The first one is I think the Arab Gazette released a statement this week about the bank loans, which were pushing the parallel rate. Is the bank loans really pushing the parallel rate? That's the first question. The second question is, the bank loans were finding their way to the stock exchange. Are we still safe as an individual to invest in stock exchange? Thank you.
Mr. Stockbroker.
Do you think I'm going to sit here and say it's not safe to invest on the local stock market? So look, I think the reality that we all have to contend with is that the regulatory risk associated with the local base, with the local stock market, is higher than it was before these announcements linking lending to the stock market. So I'll leave that my answer to that question there. And as far as bank lending is concerned, I think Tinashe actually did some very good analysis on this question to see, maybe I should let you speak for yourself.
No, go ahead.
You want to see if you actually read
Generally,
this.
generally, I think the Financial Intelligence Unit picked one company that was said to be wayward, and they looked at $6.5 billion, which at the time was something like $15 million US. And they flagged that as being part of the speculators or the saboteurs in our economy. And I make the point that $15 million US is not a lot of money. If you look at the overall market, the power market, the trades that happen in the power market, I think in a year you're looking at $2-3 billion US, and $15 million US will not move the needle. So I think that's them trying to blame the market. In 2013, our total loans and advances were $4 billion US. Now it's $1 billion US. So to think that market is actually affecting the overall market, that's not true. But I suppose they must find somebody to blame.
I mean, what's Delta's annual turnover in US dollars?
500-600 million.
So this biggest culprit, the entire loan would have been 500 divided by 12, 48, 40.
Yeah.
So
40.
it would have been 1.5 weeks of sales for Delta. And this is the biggest culprit in the currency game.
Yeah.
There's a question at the back. Oh, sorry, there's a question here.
Blawizo.
Mike here. So George, I actually like your T-shirts.
Oh, thank you.
And
My wife made it.
I'm going to talk to you after the show to
Yeah, she owes us a bottle of whiskey.
see the supplies. I know all of you guys spoke about the opportunities arising from the changing world order, and I'm talking about the Ukraine situation. And I think Rufaro said you are, or whether I think it was Rufaro or you, George. You said you are a resource-rich country.
That was him.
Yeah. But those resources
You also
are
said
only
China.
going to, they're only valuable if you put them on the table
If you dig them up and sell them, right?
and sell them. Yeah. So what do we need to do? Because I don't want my grandchildren to be still hearing this story that we are a resource-rich country.
Mhm.
I want them to see the benefit of those resources, and I think we've got a perfect opportunity now, created by this Ukraine situation, to move in and fill in the gaps. Look, I'm not an economist, so I'm just wondering, how do we convert the resources into something bankable.
You need to attract capital.
I don't know.
Yeah, no, that's what you need to do. You just need to.
Yeah. So what I would do if I was in a seat of power, right, for all these resources that are trading at sky high, record high prices, is spend a bit of time on Google, finding out who the biggest players in that game are, from a mining perspective, from a commodity trading perspective, and say, listen, guys, please get on a plane, come to Harare. We want to hear you. What do you guys need to invest billions of dollars to increase production in mines here?
You think you don't know that? Right now, you don't know the answer.
No, but it's see, the beauty about a crisis, right, is for whatever
No,
reason.
I'm asking for you don't know the answer.
I know the
You need
answer.
to-
I
you need to
I
find
know
them
the
in.
answer, but I think that, to sanitize our poor policy over the last
climb
several.
An optimal policy environment.
Yeah. Okay, you're the diplomat today.
Sure.
I think the point is made. There's another question in the audience.
Yeah.
What solutions can we offer to the government or whoever is running this thing to help or alleviate the ordinary man from this speculative thing? Because the ordinary man is who's suffering from all this speculation. So what is it that can be done? Besides, you always talk about government should create confidence. Government should create confidence. Government should. That's all you guys ever talk about. What else could be done possibly to alleviate the ordinary men from this speculation? Because they are the ones that suffer the most. Then my second question.
I'll let Titch answer that because Tinashe is going to be far less diplomatic. But okay, your
And then
second
my
question.
second question is, where are the entrepreneurs in this economy?
Thank you.
Because that's what we
Tinashe
need.
can answer the second one.
Because-
Could I answer the first and then you can?
No.
Titch, have a go at the first one.
Because you always talk about we need to bring capital in, but we always have capital going out. What are we doing to maintain the capital in Zimbabwe to grow the economy?
I think she makes an important point, right?
She does.
I just wanted to say something about the speculation. So, from an economic principle,
So what's my job here?
Listen to you
You're not
80% of the time.
recognizing.
It's not going to improve. It's okay.
Are you speculating? If I look at your inventory right now, everybody here has inventory. If you were
I don't. I'm
to
an
price,
employee.
if you were to price your inventory today and in 30 days' time, what do you think would have happened? Just repricing your inventory, just looking at the price of your inventory, you tend to find that.
I'd be stupid not to participate.
No, you're not even participating, but you
You have the best intentions.
have the extreme best intentions. And according to accounting rules, you must look at your inventory today, and in 30 days' time, you must re-look at it, and you must tell us how much inventory you're holding. What do you think is going to happen in Zimbabwe? Just looking at inventory.
If it was worth $100, is it going to be $100 in 30
In
days?
30 days' time.
In 100 Zim dollars?
It's not going. That's why I'm asking. That
Are you speculating?
probably.
No.
I'm
No.
participating. Yes.
I understood your first question was about price and stability,
And speculation.
which is a function of stability. I understood your question to refer to the inability for us to achieve price stability is because of the speculators. Now, there's a function that you will remember. We used to call it Lagrange. X equals A, which is the stable part, add beta, add speculation. At that point, you don't know what the price will be. The price can only be determined by someone else who's not a member of the production function. And that's actually the problem in our country, because we have a market which has its own mind, and we have a government which has its own mind. And that's actually normal. But the problem is, once the prices start escalating because the government has induced liquidity into the system, They'll also go to the market and say, look guys, you can't buy currency. But if buying currency makes sense, is what you're supposed to do, right? You'd be silly not to participate, because when your business goes bankrupt, it's because you did not read the winds of change. So what is the answer? I think the answer is read what the market is doing.
Speculation.
Yes. So if you go into a storm and everybody's sail is that way, by the way, I like boating. If your sails are facing northwest and that's where the wind is going, why are you turning your sail the other way?
But my question was, what are we doing
Can we
about
answer your question,
speculation?
Can we answer your question?
This is one platform that's educating people, but I think there's no greater teacher than failure. We're going to need a lot of failed entrepreneurs and business people, and they will need to diagnose correctly that they did not do the right thing when they had the chance to.
You're now going to your second question. Where are the entrepreneurs in the equation?
They are there, but we can't have entrepreneurs if you don't have capital. The most important thing for entrepreneurs is capital. Now, if your
I would say
capital is
ideas.
if your capital is shrinking, and you have Delta, or let me not say which company, you have your big corporates getting 15 million, where are the entrepreneurs going to get the capital from?
But you're contradicting it. Okay, this is, in my view, it's a contradiction, because you were talking about the capital deficit that we have, and that being a good thing because somebody has faith in us.
No, we're
no,
saying
that's a
we're
different
saying
issue.
the opposite. Actually, we're saying right now we have a capital surplus,
We have a current account surplus
current account surplus.
and a capital deficit.
I want to go
It
back
means there's
briefly
no
to
capital coming in. We're actually taking our
to your
capital.
first
Yeah, but
No,
that's why
I
I'm
think
asking also. Okay,
No, this is an
okay,
important
wait,
point.
wait.
Sorry, let me just come in here. This is an important point that Tinashe is making. And it goes to the heart of your question. So we have a current account surplus. That means on a day-to-day trading basis, we are sending more money out than is coming in. And we have a capital account deficit, which means in terms of investment monies are leaving the country
Yeah,
and not coming in.
But that goes back to my question. If we have lots of money coming out, where are the entrepreneurs to keep it in?
Well, the problem is the environment, right?
The speculation.
No, it's not the
No,
speculation.
yeah, I want to get into the speculation a bit because I think you guys waffled.
Well,
Sorry, can I answer from
Okay.
the audience? Yeah. Good evening, good afternoon. My name is Elias. Just to answer, we are in a learning phase, so it's a cycle. So whatever is happening to us today, we are learning. As we learn, then we perfect it, like what teachers just said. So just to answer your question, yes, they're entrepreneurs, but they don't understand what they're doing. So if you notice outside there's a flea market, there's a decongestion in the city. There are so many things happening at one go. We are 40 years into independence, just a lot of stuff. So as we are learning, we are going to come out of it one of the days.
Any other questions? I think this is a good place for us to wind up the show. We are well over our time. Thank you very much. It's been lovely having you. It's been lovely having a live studio audience. We are still learning and experimenting with the format of having a studio audience. So we'd love to have your feedback. We'd love to have more interaction with our audience. Help us figure out what the right balance is. But otherwise, have a lovely weekend. Stay safe. Be good. If you can't be good at it.